I love the fact that you came back to tax diversification because I use that not every day, but very, very much in the sense of having people understand that there are different tax buckets to kind of have money allocated in, some with different goals, I might add as well. You know, where Roth IRA money, since it's tax free, and I'd also add it's not subject to required minimum distributions.
Yep.
So once you do this conversion, the money that's in your Roth money never has to come back out. Obviously, you can if you want to, but there's no involuntary. You're never forced to take money out of it if you don't want to, right? And so again, creating those different buckets, using it for different goals depending on it. I think the other thing I want to make sure, just on a broader level, that people understand that there are, when I talk about tax planning with people too, that taxes are a three-headed monster. Mm-hmm. You have income tax, which is exactly what we're talking about right now. And that's where the Roth conversions and managing RMDs and having plans for IRAs, 401ks, et cetera are, because that's all subject to income tax. Then you have what's called capital gains tax. Now that is if you sell a property, buy a stock, sell a stock, et cetera. So you sell an asset not within an IRA,
Yep.
but that's capital gains tax, short-term gains, long-term gains, so forth and so on. And then finally you have estate or death tax, which is what happens when you pass away. How much is going to be subject to federal and or state estate or state death tax? So everything we're talking about here on the Roth conversions, we talk about it a lot because by far, I think the biggest, again, not scientific here, but a majority of our clients have a majority of their assets in IRAs.
Yep.
So we spend so much time talking about Roth conversions and managing that amount of money because, as you were saying, Derek, we want to buy out Uncle Sam at the best possible time. And then secondly, we want any recovery, because you were saying too about if you grow your asset from $1 million to $2 million. Yeah, we want to do that. We want to let the markets do that, but we want that $1 million to $2 million growth or recovery or whatever you want to call it happening in the Roth money.
Yes.
Because that's tax-free to the individual, and as you were saying, tax-free for 10 years to the kids.
Yeah.
So tax-free is a great bucket to have money in, let me put it that way.